Perth and Melbourne, they're two cities telling completely different stories. Perth's been the golden child of the last 3 years. Record price growth, rents up double digits, and supply is at record lows. Meanwhile, Melbourne's been the underdog, written off after lockdowns, investors pulled back, and migration took time to recover. But heading into 2026, that gap is starting to close. Perth's still running hot, but it's showing clear late cycle heat, whereas Melbourne's been quietly rebuilding underneath the surface. Early data signals show sales volumes rising, vendor discounts tightening, and vacancy rates dropping. So the real question isn't which city is stronger right now, it's which one actually gives you the better opportunity from here. Because one of them is approaching its summit, whereas the other one is just leaving the valley at the very bottom. So guys, in this video, I'm gonna be breaking down for you exactly where each market currently sits in its cycle, the data signals that confirm those positions, and which one could deliver the best returns heading into 2026 and beyond. And you're gonna wanna stick around because the data might surprise you, because the city that people think is done could actually be the one that's just getting started. Guys, my name's Josh, I'm from DataEdge Property, and I help everyday Australians navigate the Australian property market using data. Data that's accessible to absolutely everyone. And if you get value out of today's video, make sure you hit that like button and subscribe so that you continue getting data-driven content just like this. And with that said, let's jump into where each city sits right now. So according to the most recent data out from Cotality, Perth's median values sit around $810,000 right now. And that's up 7.5% year on year and 4% this quarter alone. Homes are selling in just 9 days and listings are still under 3,000 across the metro area. And that's less than 20% of what we would typically consider to be a balanced market. And as I keep banging on in this channel, a balanced market is 15,000 listings. So at the moment, we are chronically undersupplied in Perth. Vacancy rates are sitting at just 0.7%, which is extremely low compared to a balanced market where we would typically see vacancy rates at between 2 and 3%. Rents are up 6% for the year. And from an investor perspective, rents are hovering just above 4.2%, which is still one of the highest in any capital city across Australia right now. Melbourne, on the other hand, it's finally showing some stability. Median values are sitting at $805,000, and that's up around 2% over the past year. So the median price, when comparing it to Perth, is actually pretty similar. In terms of auction clearance rates, well, they're sitting above 80% right now. Vendor discounting is at 3.1%, and vacancy rates, according to SQM research, are at 1.8%, and they're falling. So although they're higher than Perth's, that's still under what we would typically see in a balanced market. Listings for Melbourne though are still high, but they are trending lower month by month, sitting at around 15% lower than they were this time last year. Perth, on the other hand, is sitting at 17% below what it was last year. But again, Perth is chronically undersupplied, Melbourne isn't. So Perth's property market is definitely still roaring on momentum, but Melbourne's data is quietly turning up the heat. And with that said, let's touch on the drivers behind each market. So Perth's strength, it comes from its scarcity and employment. Net overseas migration is strong, the resources sector is strong, and new supply remains incredibly weak. And those factors keep competition fierce on the ground and days on market near record lows. But at the same time, it's also a classic late cycle indicator where yields are starting to flatten out and growth is concentrated in the mid-market now. Melbourne's story, on the other hand, is about re-emerging confidence. Credit volumes are rising for the first time in years and population growth is incredibly strong, with over 130,000 new residents in the past 12 months, according to the most recent ABS data for March. So sentiment is definitely turning in Melbourne, but it's not broad-based. We're seeing faster sales in the affordable pockets of Melbourne's growth corridors, like Sunshine West and Frankston, whilst the premium suburbs, they've gone from declines in previous years now to actually flattening out instead of falling. So whilst Perth is about scarcity, Melbourne is about renewal. But the real difference is how each city fits different types of investors. And if you want to see why Melbourne could be set to rebound in 2026, make sure you check out my video on the key signals that I'm watching for that will confirm when that recovery is really taking shape. That video will be linked on the screen and in the description box down below. It's definitely worth watching if you want to understand where Melbourne's turning point could be coming from. With that said, let's discuss affordability because that's where the gap really narrows. So as you can see from this chart, which is from ANZ's most recent affordability report, and it looks at the percentage of household income that's required to service a new mortgage. You can see that Perth households are spending roughly 44% of their income servicing a new loan, and that's up from the mid-30s just a few years ago. Melbourne, on the other hand, sits at around 46%. But that's improved in recent years, especially against its historical rival Sydney, which now sits at a whopping 62%. And even Adelaide is now at 56%. So I dare say that Melbourne will have strong tailwinds in the coming years in terms of interstate migration from those two cities. So even though their median prices might be relatively the same on paper, Melbourne's actually significantly less stretched from an affordability perspective relative to income than it used to be, whereas Perth is far more stretched. And whilst they might be sitting at a similar percentage now, that material shift in just a short space of time can really play on the psyche of the domestic population who just isn't used to paying these types of prices for property. And if we look at property value to income ratios, well, they're similar too. It's about 7.3 times in Perth, and that's up from 4 times at the beginning of the boom, and it's 7 times in Melbourne, which is down from a peak of 8 just a few years ago. So importantly, they're moving in opposite directions. Perth is tightening, Melbourne is loosening. And that matters in terms of who can sustain growth from here on in. So with that said, let's touch on where each market currently sits in its cycle. And right now, Perth is well into its maturity phase, but it's still charging ahead. Prices are accelerating again, proof that demand hasn't cooled just yet. Listings, however, are at rock bottom, the lowest they've been in history. So literally, it's only up from here in terms of supply. Although I won't say it can't get any worse because every time I say that, Perth seems to surprise me again and again. What I will say though is that it appears that we're closer to the summit than we are to ground zero, but momentum remains firmly intact for now. Melbourne, on the other hand, is in its early recovery phase. You're seeing steady month-on-month growth and quarterly growth and clear upward momentum now, especially in certain value pockets, which are growing significantly quicker than the more affluent parts of Melbourne. Remember, there's always markets within markets. So with that said, if you're chasing momentum today, the clear answer is Perth. But if you want timing and you're prepared to be patient, then the answer is Melbourne. And if you want to learn how to assess individual properties, not just the market itself, make sure you grab my completely free asset due diligence checklist in the description box down below. It shows you how to spot red flags, evaluate land quality, zoning, and tenant demand, so you can avoid buying the wrong asset in the right city. And just a quick heads up, the data tells me that over 90% of the people who watch my videos are not subscribed. So if you find these types of breakdowns useful, please make sure that you are subscribed so you don't miss more videos like this that will be coming out soon. And with that said, let's discuss population momentum because that will tell us where the future demand might be for each city. And this one stat might decide which market still has more fuel left in the tank. So Perth's population is forecast to grow by 20% by 2036. That's an extra 550,000 extra people, pushing its metro population to 3.5 million. Melbourne, on the other hand, for the same period is expected to add between 1.5 to 1.6 million people, pushing its metro population to 6.7 million. But here's the twist. Their growth rates are nearly the same, hovering at around 1.5% per annum on a forward basis. Yet Perth's new build base is far smaller. That means Perth's demand pressure gets squeezed in early, whereas Melbourne's wave may be slower, but it has significantly more runway. And you're gonna wanna stick with me because in just a second, I'm gonna reveal to you which city's supply system is better built to survive this pressure. So when we're talking about supply capacity, that's Melbourne's hidden edge. Victoria completes over 60,000 new dwellings annually as compared to Western Australia's 20,000. That's 3 times more in absolute terms. And on a per capita basis, Victorians' completions per 1,000 people are 8.7, and that exceeds Western Australia's 6.9, which means that Victoria has 25 to 30% more supply per resident. And the reason for this is because Melbourne has deeper developer capacity. It's got a stronger multi-unit apartment pipeline and more scaling leverage when demand increases. By contrast, Perth's pipeline is far more skewed towards detached housing, which is way slower to ramp up. So unless Perth significantly lifts its approvals, it'll feel the squeeze much harder. And Perth's labour force is nowhere near as agile as Melbourne's. And that's why we're seeing Perth's government offering cash incentives for New Zealanders to fly tradies into Perth right now. They just don't have the right number of people to solve the supply issues right now. And guys, here's a quick question for you. If you had $800,000 to invest today, would you invest it in Perth for momentum or Melbourne for timing? Drop your answer in the comment section down below. I'm keen to hear all of your thoughts and we'll try to respond to each and every one of you. And if you're still here and enjoying the video, make sure you hit that like button. It really does help support this channel. And with all of that said, let's discuss who each market suits. But before I do that, just remember, I don't know your individual circumstances, and I'm certainly not your financial advisor. I'm just a guy on the internet who loves digging into the data behind property. So always get independent advice before making any investment decisions. So with that said, Perth or Melbourne? Well, when you layer population growth over supply, you can see 2 very different investor landscapes forming. Perth still suits those chasing near-term momentum. Tight listings, fast sales, and strong rental competition keep conditions very hot. It's ideal if you're tactical. You understand cycles move fast, you're watching the data monthly, and you're comfortable managing a shorter holding window if momentum does fade. And again, it's always markets within markets, particularly in Perth at this stage of the cycle. Melbourne, on the other hand, fits the more strategic investor. It's a market that compounds quietly, it's got a deeper economy, more balanced supply, and strong demographic drivers. It rewards those who think in horizons over 5 to 10 years, not 1 or 2. Over the last 30 years, Melbourne's seen less volatility, more scale, and a longer runway once confidence eventually does build. For those wanting stability throughout the cycles, Melbourne's depth is very hard to beat. For those chasing pulse and performance right now, Perth might still deliver for you, but again, you need to be strategic and data-driven, particularly at this point in the cycle. So with that said, which is the better option heading into 2026? Well, the truth is, it really depends on you, your investment journey, and your own personal circumstances. Perth remains the benchmark of this cycle, the market that's showing what scarcity and migration can do in real time. Melbourne isn't there yet, but the foundations are building and we're seeing the green shoots now. It's definitely the story of patient accumulation, not instant gratification. Cycles never move in sync, and that's exactly what creates opportunity. The key is knowing where the baton passes, when short-term momentum gives way to long-term value. And that's why in property, data always beats noise. I'm Josh from DataEdge Property, helping you navigate Australia's property markets, and I'll see you in the next one.